Digital and Sustainable Portfolio Management in the Era of Global Financial Transformation. Ladies and gentlemen, welcome. Today, we stand at a powerful intersection, the moment where technology, sustainability, and financial strategy finally converge. This isn't just another transformation era. This is a redefinition of how economies grow, how businesses survive, and how leaders like you shape the next decade. And within this transformation, SMEs and family businesses are not followers. They are the hidden giants. They are the backbone of our economies, the lifeblood of innovation, and often the first to adapt when the world shifts. Our session today is not simply about understanding digital tools or ESG frameworks. It's about unlocking a new mindset, one where portfolios are not only profitable, but purposeful, not only efficient, but enduring, not only smart, but sustainable. My name is Ari Warokka, and I am a professor at Tongmyong University. I have spent years researching how digital technologies and sustainable finance reshape competitiveness, particularly focusing on the unique challenges and opportunities here in Asia. Today, I am here to bring you global evidence, local perspectives, and breakthrough insights, all aimed at helping you build portfolios that thrive in a fast-changing world. You're not here by accident. You're here because you're ready to shape the future. Let's begin that journey. This lecture isn't just an academic event. It's a bridge between nations, a collaboration between Indonesia and Korea, and a shared commitment to preparing the next generation of entrepreneurs, policymakers, and innovators. This session brings together students who will become tomorrow's leaders, researchers who will shape tomorrow's policies, and SME owners whose decisions will influence entire communities. It's a rare opportunity, a room filled with people who are not just learning, but preparing to change the rules of the game. The world is moving fast, but this collaboration is a statement. Indonesia and Korea don't just want to keep up, they want to lead. And by being here today, you are part of that leadership. Before we dive deep, let's set the destination. Today's session is built around 4 promises, and by the time you walk out, each of them will add a new level of clarity to your thinking. First, you will understand how the global financial landscape is shifting, powered by digital innovation, pressured by climate realities, and shaped by new generations of consumers who care about purpose, not just profit. Second, you will explore the unique challenges and opportunities facing SMEs and family businesses. Third, we will dive into real case studies, not theories, not assumptions, but real companies achieving real results. And finally, we'll help you design a 3-year roadmap, a practical, achievable, strategic plan for going digital, going sustainable, and going further than you thought possible. This is not just learning, this is transformation. Let me guide you through the journey we will take together. We begin by exploring the current landscape. You will see how technology, ESG, policy shifts, and customer behavior are reshaping modern portfolio thinking. Next, we enter the world of sustainable portfolio innovation, where digital tools meet sustainability strategies. This is where SMEs and family businesses discover how to future-proof their capital decisions. Then comes the heart of this presentation, case studies. You'll meet companies of different sizes and industries, companies that dared to challenge old habits, embraced innovation, and reaped the rewards. After that, we look into the future outlook, projecting what 2030 might look like and what leaders must prepare for today. Finally, we open the floor for discussion and Q&A, because the best ideas often emerge when great minds challenge, question, and imagine together. To understand the future, we must first accept one truth. The rules of global finance have changed permanently. Where once the world rewarded companies that maximized profits at any cost, today's world demands more. Investors want transparency. Consumers want responsibility. Governments want accountability. And the planet demands action. We are witnessing a shift from shareholder value to stakeholder value, where businesses are judged by the impact they create, not just the money they make. Greenhouse gases, supply chain ethics, worker well-being, these are now financial metrics, not moral statements. At the same time, digitalization has exploded. AI, automation, blockchain, predictive analytics, these aren't buzzwords. They are tools that are quietly rewriting financial strategy. With real-time data, companies can identify risks before they happen, find opportunities faster, and make smarter investments. And then there's regulation. Across Europe, Asia, and emerging markets, sustainability reporting is becoming mandatory. Investors are pricing climate risk into valuations. Banks are shifting capital away from brown industries and toward sustainable ones. These new rules are not threats. They are opportunities. Opportunities for the bold, the prepared, and the visionary. When we talk about digital and sustainable portfolio management, many people immediately imagine large corporations, giants with billion-dollar budgets, huge R&D teams, and global influence. But here's the twist. The real transformation of the global economy depends on SMEs and family businesses. Why? Because they make up over 90% of all enterprises worldwide. They employ the majority of people, they shape local communities, they create the products we use every day. They are the heartbeat of every economy, from Indonesia to Korea, from Southeast Asia to Europe. Family businesses, in particular, bring something unique: legacy, values, long-term thinking, a sense of responsibility that extends beyond quarterly profits. But let's be honest, these businesses often face more challenges than big corporations. Limited access to green financing, gaps in digital talent, pressure from global competitors. Yet this is exactly why today's topic is so powerful. Because when SMEs and family businesses embrace digital technologies and sustainable finance, they gain a competitive edge that big companies can't replicate quickly. They become agile, efficient, trusted, future-ready. Think about how businesses used to make decisions. They looked at spreadsheets, estimated risks, predicted returns, and followed their instincts. And in many cases, that worked. But today, that approach is no longer enough. We are moving from traditional portfolio management to digital sustainable portfolio management, a completely new mindset. In the old world, success meant balancing return and risk. In the new world, there is a third pillar: impact. Not just how much money will this investment make, but also what kind of world will this investment create. Digital tools now allow businesses to see risks that were once invisible: energy waste, supply chain inefficiencies, carbon footprints, employee well-being metrics, and more. And ESG factors are no longer philosophical values. They are measurable performance indicators. The companies that master this approach don't just survive disruptions, they lead through them. Digital sustainable portfolios make businesses more resilient, more efficient, and more attractive to investors, partners, and talent. This is not evolution. This is an upgrade. We are living in a moment where sustainability and finance are merging into a single ecosystem, and SMEs are right at the center of it. Over the last 5 years, the rise in sustainable finance has been remarkable. Banks are rolling out green loans and sustainability-linked loans, SLLs, at record speed. These tools are specifically designed to help SMEs reduce emissions and improve efficiency, often while lowering financing costs. Governments are stepping in globally, from Europe to Indonesia and Korea, introducing regulations and taxonomies with versions specifically tailored for SMEs. Crucially, global supply chains are evolving. Large corporations now require their SME suppliers to meet ESG standards. This means sustainable SMEs gain access to bigger markets, while those who lag start falling behind. Finally, customers themselves are changing. They want to support companies that align with their values: fairness, community, and the environment. This is the moment where SMEs can stand out, attract new investment, and grow faster. Sustainable finance isn't the future. It's already here. Digitalization is no longer a luxury. It is the foundation of modern financial decision-making. For SMEs, this is about reclaiming control over the business. Think about the power of cloud accounting. Instead of guessing or waiting until the end of the month, SMEs can see their financial health in real time. Every decision becomes smarter, faster, and more accurate. Fintech is breaking down barriers. AI-driven credit scoring means small businesses, even those without traditional collateral, can now secure financing based on performance data rather than outdated paperwork. This levels the playing field significantly. New sources of capital are emerging through crowdfunding and tokenization, allowing you to raise funds directly from your community and digital investors who believe in your mission. Finally, automation tools handle complex tasks, invoices, forecasts, payroll, freeing up leaders to focus on creativity and growth. Digitalization does not replace human leadership. It empowers it. It gives SMEs the kind of financial insight that was once available only to big corporations. This is how SMEs leapfrog into the future. One of the biggest forces shaping the future of sustainable finance comes from policy and regulation, not just the market. Governments worldwide are making bold net zero commitments. These aren't theoretical. They translate into new taxonomies, reporting requirements, and incentives that directly impact how you operate. For example, in Southeast Asia and Korea, governments are actively creating frameworks and grant programs to help SMEs with green innovation and carbon reporting. These policies are designed to prepare you for global competition, not to burden you. Regulators are also demanding more transparency. Large corporations now need their SME suppliers to meet ESG standards to comply themselves. This means SMEs must act now before sustainability becomes a mandatory requirement for market entry. Finally, international lenders and impact funds all have sustainability mandates. If your business shows strong ESG performance, the world opens up. Cheaper financing, new investors, and new markets. Regulation is no longer just about compliance. It's about opportunity. Those who prepare early gain the advantage. Let's confront the reality. The road to digital and sustainable transformation is not without obstacles, but understanding these challenges is the first step to overcoming them. The first issue is limited ESG knowledge. SMEs are busy surviving. Sustainability often feels distant, but we must reframe this today. Second is short-term pressure. When margins are tight, long-term sustainable investments feel risky. But what if we view ESG not as a cost, but as a path to efficiency, savings, and new opportunities? Third, SMEs need practical actions, not complex consulting. They require simple, actionable steps, and that's exactly what digital tools now offer. Finally, there is information overload. Too many grants, loans, and frameworks. But here is the truth. These challenges are not barriers. They are invitations to innovate. When SMEs overcome them, they don't just catch up, they become leaders. Family businesses are unique, built on love and legacy. But this emotional foundation creates unique challenges for digital and sustainable transformation. The first challenge is balancing tradition with innovation. Older generations favor stability. Younger ones push for digital and sustainability. Their visions need strategic alignment. The second is risk appetite. Sustainable projects require upfront costs. Family businesses often prefer conservative spending to protect the legacy, but the biggest risk today is failing to adapt. Next is governance. Operating on trust and intuition is a strength, but not effective for formal ESG reporting or KPI tracking. Formalizing roles is essential for the sustainability journey. Finally, many family businesses suffer from green silence. They do amazing work, reducing waste, investing in the community, but fail to communicate their impact. They miss out on financing and recognition. These challenges don't weaken family businesses. They reveal the exact areas where transformation can unlock their greatest potential and ensure the legacy endures. Imagine your business not as a collection of unrelated projects, but as a living ecosystem, an ecosystem where every investment shapes your future. That is the essence of sustainable portfolio management. It's no longer enough to ask, will this project make money? Instead, the question becomes, will this project make money and strengthen our future? Sustainable portfolio management connects four pillars. 1. Financial resilience, investments that improve cash flow, competitiveness, and long-term profitability. 2. Environmental impact, reducing energy use, emissions, and waste, not just for compliance, but for efficiency and brand loyalty. 3. Social value, treating employees well, strengthening communities, empowering suppliers, because people are the engine of every business. 4. Governance and trust, systems, transparency, and data that prove your business is reliable and future-ready. When these four pillars work together, something magical happens. You don't just build a portfolio that performs well, you build a portfolio that lasts. That is the power of sustainable portfolio management. It is strategic, it is transformative, and it is absolutely within reach for small and medium enterprises and family firms. To transform your portfolio, you don't need 100 tools. You only need 4 powerful levers, simple, high-impact strategies any SME or family business can start using today. 1. Decarbonize. This is where cost reductions meet environmental action. Focus on energy efficiency and lean production. These are direct pathways to lower bills and increased margins. 2. Digitize. Digital tools help you see the invisible, inefficiencies, missed opportunities, and hidden risks. When you digitize your core processes, you gain clarity, and clarity leads to power. 3. Diversify. In a world of volatility, diversification is survival. Explore new products, new markets, and new partnerships, especially those aligned with sustainability. Green markets are the fastest growing on Earth. 4. Democratize capital. You no longer rely solely on traditional banks. Tools like sustainability-linked loans, SLLs, crowdfunding, and impact investors allow you to grow without losing control. Every successful transformation story starts with these 4 levers, and today, you'll learn exactly how to use them. Digital transformation is not about technology. It's about decision-making power. When SMEs adopt digital tools, they gain something priceless: visibility. And visibility is what turns uncertainty into opportunity. Cloud dashboards let you monitor cash flow and performance instantly. No more waiting for monthly reports. IoT sensors show exactly where energy is wasted, and AI models let you simulate scenarios so you can test decisions before committing capital. Simple, digital ESG assessment apps guide SMEs through sustainability metrics in minutes, not months. These tools are built for busy entrepreneurs who need clarity fast. Imagine having a digital twin of your business, a model that shows how each project affects profit, emissions, and risk. You can present these insights to banks and investors and be rewarded with lower interest rates and stronger trust. Digital tools level the playing field. You don't need more staff or high budgets. You simply need to start using the tools that are already available. When SMEs hear sustainable finance, they imagine complex standards. But the truth is, sustainable financing has never been more accessible. Let's start with green loans. These are dedicated to projects like energy-efficient equipment or renewable systems. Banks want to offer them because regulators reward them for financing environmentally positive projects. Then we have sustainability-linked loans, SLLs, the most revolutionary tool for SMEs. The loan doesn't need to be green. Your performance is key. If you reduce emissions or improve energy efficiency, you get lower interest rates. It literally rewards your progress. Finally, don't overlook grants and guarantees from governments and development agencies. These exist specifically to reduce your upfront risk and accelerate your transformation. The message is clear. Financing is no longer a barrier. If you are willing to take the first step towards sustainability, the financial system is ready to support you. Sustainability-linked loans, or SLLs, are game changers, especially for SMEs. They transform sustainability from a cost into a competitive advantage that directly reduces your financing expenses. Here is how they work. You don't need a fully green project. You simply commit to measurable sustainability targets, perhaps reducing energy use or cutting carbon emissions by a set percentages. If you hit those targets, your bank rewards you with interest rate discounts. If you miss them, your rate stays the same or adjusts slightly. It's a win-win because the effort to become more efficient benefits your business regardless. This model removes complexity and makes sustainability practical. It allows SMEs to start with simple, achievable goals, measure progress using digital tools, turn ESG performance into financial gains, build credibility with banks, customers, and investors. With SLLS, sustainability isn't just the right thing to do, it becomes a smart financial decision. Sierra Leonean Leones help small and medium enterprises lead with confidence. You might wonder, why are banks suddenly offering green loans and ESG incentives? The answer is simple. It's good business for them and for you. First, banks face new regulations that require them to manage climate risk. They must reduce exposure to carbon-intensive activities. When you adopt sustainable practices, you immediately become a lower-risk borrower, and banks prioritize low-risk clients. Second, sustainable SMEs tend to perform better in the long run. They use less energy, waste fewer resources, and attract loyal customers, which increases their repayment reliability. Again, a win for banks. Third, banks gain crucial reputational advantages. The financial world rewards institutions that support clean energy and inclusive growth. By financing your transformation, banks strengthen their own brand. Finally, sustainable lending opens the door to cross-selling advisory services and digital tools. Banks are becoming partners in your transformation. When you pursue sustainability, you're not walking alone. The financial system is evolving to walk with you, and sometimes even to pull you forward. Let's look at a powerful real-world example, Virgin Money in the UK. In 2021, they launched sustainability-linked loans specifically for SMEs, not just large corporations. Their idea was revolutionary. SMEs shouldn't need complex certifications to access sustainable finance. They created a simple, digital, and transparent way to turn sustainability into a financial benefit. Virgin Money allowed SMEs to access SLLS based on an easy ESG assessment, partnered with the Future Fit Foundation. This removed traditional barriers and democratized sustainable finance. The result? Thousands of SMEs were able to evaluate their performance, identify improvement areas, and unlock lower-cost financing, all through a clear, guided process. Virgin Money proved that sustainable finance doesn't have to be complicated. It has to be accessible. And when it is, SMEs rise to the occasion, turning good intentions into measurable progress. The innovation that made Virgin Money's approach scalable was the Sustainable Business Coach app. This tool embodies the future of SME sustainability: simple, digital, fast, and action-oriented. Instead of complex standards, the app uses a guided questionnaire that can be completed in about 30 minutes. It asks practical questions about energy, waste, and employee well-being, then instantly translates the answers into a clear ESG score. But the magic is the result. The app generates a tailored sustainability action plan, showing SMEs exactly where to improve. No jargon, just practical steps. Crucially, this ESG score and action plan can be directly used when applying for sustainability-linked loans from Virgin Money. This app transformed sustainability from something big companies do into something every small and medium-sized enterprise can access. It's a bridge between ambition and opportunity. With the right tools, sustainability becomes not only achievable, but exciting. What can SMEs and family businesses learn from the Virgin Money example? The biggest lesson is sustainability becomes achievable when it becomes simple. First, use digital tools to reduce complexity. A simple 30-minute assessment can replace weeks of uncertainty. SMEs don't need perfect ESG practices on day one. They need a foundation that is easy to act on. Second, convert intentions into measurable targets. Every SME wants to be responsible, but sustainability-linked loans make it financially rewarding. When your goals are measurable, banks and customers trust you more. Third, seek partners, not just funding. Virgin Money provided capability building, not just loans. Many banks and support organizations today offer training, ESG tools, and coaching. SMEs must take advantage of this support. Fourth, small steps lead to big transformations. You don't need to overhaul your entire business. You just need to start the journey. This case shows us a powerful truth. SMEs don't need to be perfect to start. They just need to start to become exceptional. Our next example takes us to Asia, to Singapore, where OCBC launched one of the region's most comprehensive sustainable finance frameworks for SMEs. OCBC understood that SMEs often want to go green, but lack the tools and expertise. So they built a framework specifically to remove complexity and help firms transition one step at a time. The real hero here is Dynamac, a mid-sized engineering SME. They were the first under OCBC's framework to convert an ordinary loan into a sustainability-linked loan. This is a landmark because it showed the entire region that even firms in heavy industries, not just tech startups, can shift towards sustainability. Dynamac committed to reducing their carbon intensity by 25% over 5 years. OCBC rewarded this transformational ambition with favorable loan terms. This case proves that when banks create the right environment, SMEs can rise to the challenge. It shows that sustainability is not limited to green industries. Every small and medium enterprise, including those in manufacturing and construction, can become part of the low-carbon future. Let's take a closer look at what Dynamac actually did, because their transformation offers a blueprint for SMEs everywhere. First, they made a strategic commitment, reducing carbon intensity by 25%. This number was realistic, measurable, and financially meaningful. Then they launched a series of targeted operational upgrades, diesel to electric power transition. This reduced emissions, stabilized fuel volatility, and improved reliability. Energy efficiency upgrades. Simple tools like LED lighting created measurable cost savings while lowering environmental impact. Solar panel integration. By generating renewable electricity on site, they reduced dependence on fossil fuels and improved long-term cost stability. Low-carbon CapEx prioritization. They restructured their investments to prioritize sustainable assets that saved energy and strengthened competitiveness. Each step contributed to operational excellence and sustainability at the same time. Dynamac's journey teaches us that sustainability doesn't require overnight revolution. It requires smart sequencing, bold commitment, and consistent action. One thing that made Dynamac's transformation credible was their commitment to data-driven leadership. They didn't guess their emissions reductions. They measured them. They used digital tools to track energy use, water consumption, and waste. By creating this baseline, they could monitor every single improvement. Crucially, they introduced independent verification. External experts validated their results, ensuring transparency and building trust with OCBC and their clients. This is critical. ESG success without verification is just marketing. With verification, it becomes a competitive advantage. So, what was the incentive? Because Dynamac met their sustainability KPIs, OCBC reduced the interest rate on their loan. Sustainability didn't just improve their operations, it saved them money. Data plus transparency plus incentives equal a powerful formula. This case demonstrates the future of sustainable finance. Not storytelling or surface-level initiatives, but measurable, verifiable progress that drives real business value. What can we learn from the Dynamac transformation? These lessons can immediately guide any SME or family firm. First, start with one measurable KPI. You don't need 20 metrics or global certifications. You need one clear, impactful target, like reducing energy use or cutting emissions by a small percentage. Second, use existing tools and frameworks. SMEs shouldn't build ESG systems from scratch. Banks, government agencies, and foundations already provide tools for measuring sustainability. Use them. Third, link performance to financial incentives. When your sustainability efforts unlock cheaper financing, the business case becomes obvious. Savings excite leaders, employees, and shareholders. Fourth, combine operational improvements with financial innovation. Dynamac didn't just change machinery. They changed their mindset, restructuring their investment priorities to favor long-term resilience. And the final lesson, SMEs don't need to wait for the future. They can shape it today. This is the kind of transformation that sets a new standard for entire industries. Let's shift our focus to a different kind of SME, tech-forward innovations. This was a fast-growing, technology-driven company with a powerful vision to create energy-efficient smart devices that reduced environmental impact. Tech-forward wanted to expand, but faced the classic challenge. How do we raise capital without losing control? They needed financing that supported their deep commitment to sustainability. So, instead of relying on conventional lenders, they worked with an advisory platform and secured a green loan. This loan wasn't just about money, it was about alignment. It fueled their growth while allowing them to stay true to their environmental purpose. This story matters because it shows the flexibility of sustainable finance. You don't have to be a heavy manufacturer or a big corporation. Even innovative, mission-driven SMEs can tap into green financing to accelerate development and scale production. Tech Forward teaches us one thing: sustainability isn't just an operational choice. It's a strategic growth engine for small and medium enterprises with vision. What did Tech Forward do with their green financing? They used it to spark transformation across their operations through deeply strategic shifts. First, they invested in solar-powered production facilities. This reduced operating costs, cut carbon emissions, and strengthened alignment with their brand promise of energy efficiency. Second, they redesigned their products using sustainable materials and eco-friendly structures, making them a leader in green product innovation. Today, customers buy values, not just products. Third, they implemented AI-driven waste reduction across their supply chain. AI identified inefficiencies, reduced excess inventory, and lowered costs, all at the same time. Finally, they fueled green-themed R&D, developing products that maximized energy savings and durability. The result? A company that didn't just claim to be sustainable, but proved it with actions. Tech Forward turned green financing into a catalyst for innovation. When vision meets capital, transformation becomes unstoppable. The most inspiring part of Tech Forward's journey is what they achieved. Within just a year of adopting sustainable financing and digital innovation, their business exploded with growth. Sales increased by 70%. Customers were actively looking for sustainable solutions, and Tech Forward delivered products aligned with those values. Production costs dropped by 30%. Solar power reduced energy bills. AI optimization cut waste. Sustainability didn't increase costs, it slashed them. Investor interest skyrocketed. Investors are actively searching for companies that combine technology with environmental impact. Tech Forward became irresistible, not because of hype, but because of verifiable results. The company secured a new round of funding, this time specifically from investors seeking green innovation. This slide is simple but powerful. Sustainability is not a burden. It is a multiplier. It multiplied sales, efficiency, credibility, and investor confidence. Tech-forward story tells SMEs everywhere. If you integrate sustainability into your business model, the world will notice and reward you. Now that we've seen three very different examples, what unites them? What patterns can SMEs and family businesses learn? First, digital tools and sustainable finance are a perfect match. Technology is what makes sustainability measurable, actionable, and simple, whether it's ESG apps or carbon tracking platforms. Second, banks are no longer just lenders. They are becoming partners in transformation, providing frameworks, digital assessment tools, and crucial incentives. SMEs do not have to go on this journey alone. Third, KPIs are the language of trust. When SMEs define measurable goals, like reducing carbon intensity or improving energy efficiency, they unlock new financing and new forms of credibility. Fourth, transparency creates opportunity. When you report ESG performance, investors see your business as forward-looking, resilient, and future-ready. And finally, these cases prove that sustainability pays. Every company we examined experienced cost reductions, revenue increases, or financing incentives. These are not isolated stories. They are early signals of a global shift, where SMEs that innovate sustainably will outperform those that don't. Family businesses have something special: values, stability, and heritage. But here's a powerful insight. Research now shows that family businesses that integrate ESG into their strategy outperform those that don't. Why? Because ESG strengthens the exact qualities that make family businesses unique. They think long-term and prioritize legacy, aligning perfectly with sustainability. Studies show that family firms with strong ESG practices attract more loyal customers, gain higher valuations from investors, and navigate crises more effectively. They also become more appealing to the younger generation who want to work for companies that reflect their values. Here's the catch. Many family firms are better at sustainability than they communicate. They support employees and invest in communities, but they don't measure or report it. This is a missed opportunity for transparency. The message is clear. Family businesses aren't just capable of ESG, they are naturally built for it. Their legacy becomes their superpower. Let's look at a multi-generation manufacturing company across Asia. For decades, they relied on traditional methods. But the world changed, energy costs soared, and customers demanded greener products. The younger generation saw the need to evolve. They advocated for digital tools, data-driven decisions, and sustainability-focused investments without abandoning tradition. The family made a pivotal decision to shift their entire portfolio strategy. They adopted automation technologies to improve productivity. They invested in energy-efficient machinery to slash electricity consumption. And most importantly, they launched a new line of greener, eco-conscious products that aligned with their customers' changing values. To fund this, they blended family capital with sustainability-linked loans, vendor financing, and bank support. What we see here is a beautiful transformation, a family business honoring its heritage while courageously stepping into the future. They didn't resist change, they led it. The transformation didn't just change how the family business operated, it changed who they became. First, the financial results were undeniable. With energy savings, automation, and process improvements, operating margins increased significantly. Their new sustainable product line attracted a new wave of purpose-driven customers. Second, they gained access to new financing. Banks that once saw them as traditional now saw a forward-thinking, ESG-committed business. Their ESG transformation became a magnet for capital. Third, and most importantly, they strengthened governance. They created a formal ESG committee inside the family board and began tracking ESG KPIs, linking executive compensation to sustainability goals. This brought the generations together. The older generation saw sustainability as a strategy for resilience, and the younger generation saw that meaningful change could honor tradition. This case proves a profound truth. When family businesses embrace ESG and digital transformation, they don't just survive, they become symbols of generational leadership. Let's zoom out and look at what research says about the relationship between digital transformation and sustainability, because the evidence is stronger than ever. First, studies across the globe consistently show that digital transformation improves sustainability performance. Why? Because digital tools make invisible problems visible. They reveal waste, expose inefficiency, and highlight carbon hotspots, allowing leaders to fix them with precision. Second, research confirms that SMEs, who digitize and adopt sustainable practices, outperform their peers, not only in operations, but also in profitability and resilience during crises. Third, for family businesses, success is shaped by internal dynamics, values, and generational alignment. This means transformation requires not just technology, but cultural evolution. Fourth, responsible digitalization is crucial. It's about integrating digital tools that specifically support your sustainability priorities, whether that's reducing resource use or enhancing governance. In the end, research confirms what case studies already show. Digital transformation and sustainability aren't separate journeys. They reinforce one another and create unstoppable competitive advantage. Every SME and family business needs a roadmap, a structured, practical way to transform. Here's a powerful 5-step framework that simplifies the journey. First, set strategic objectives. Decide what matters most: cost reduction, market access, resilience, or customer trust. Clarity creates direction. Second, engage stakeholders. Transformation succeeds when employees, customers, suppliers, and banks all know where you're going. You're changing mindsets, not just processes. Third, define measurable ESG dimensions. Pick simple metrics: energy use, carbon intensity, or waste reduction. Don't overwhelm yourself. Start small but meaningful. Fourth, redesign business and operating models. This is where you act. Adopt energy-efficient equipment, launch greener products, digitize workflows, and strengthen governance. Fifth, execute iteratively. Transformation doesn't happen in one big leap. It happens through continuous improvement. Pilot, learn, adjust, and then scale. With this framework, SMEs don't need to guess or imitate big corporations. They simply need to follow a structured journey, one step at a time. Digital plus sustainable equals the new blueprint for business excellence. Imagine your business in 2030. What does success look like in a world that is digital first and sustainability driven? First, good businesses will run on real-time ESG dashboards, tracking carbon, energy, and costs instantly. Decisions won't be slow, they'll be data-driven and precise. Second, SMEs will have standardized sustainability ratings, just like credit scores today. These ratings will determine your access to capital, partnerships, and global supply chains. Third, portfolios will tilt toward low-carbon and circular business models. Waste won't be reduced, it will become a resource. Products will be designed for longevity and recyclability. Fourth, family businesses will play a bigger role as community stewards, preserving resources and inspiring younger generations through sustainable leadership. Businesses that thrive in 2030 will embrace transparency, innovation, resilience, and purpose. They won't chase the future, they'll shape it. And here's the truth: 2030 leadership starts with the decisions you make today. Every step you take now determines the business you will become. Transformation doesn't have to be chaotic. With the right structure, it becomes a clear journey of growth. Here is a practical 3-year roadmap for SMEs. Year 1, measure. This is the diagnosis year. Before you change anything, you must understand where you stand. Implement basic digital tools: cloud accounting, simple ESG trackers, energy monitoring. You don't need perfection, only visibility. Because what gets measured gets improved. Year 2, optimize. With data in your hands, the second year is about turning insights into results. You identify quick wins, energy savings, waste reduction, and automation opportunities. Every improvement strengthens your financial position and your sustainability profile. This year builds momentum. Year 3, scale. This is where things accelerate. You scale proven improvements across the business. You pursue sustainability-linked loans and larger digital projects. This roadmap doesn't require huge budgets. It requires intention, consistency, and courage, qualities SMEs already have. Family businesses operate differently. They have deeper values and longer time horizons, so their roadmap must honor tradition while embracing transformation. We define this journey in 3 years. Year 1 is about alignment. The most important step for any family business is unity. This year is dedicated to aligning the generations around a shared ESG vision, discussing your values, legacy, and purpose. This alignment is emotional and strategic, creating clarity and harmony before you move forward. Year 2 is about embedment. Once the family is aligned, it's time to integrate ESG into governance. You should establish a small ESG committee, introduce KPIs for energy or community impact, and link executive compensation to those sustainability goals. This critical step embeds ESG into the very DNA of the business. Year 3 is about communication. Finally, you share your story with the world, publish simple sustainability reports, engage banks and investors using your ESG portfolio, and let customers and suppliers see your progress. This open communication builds trust and opens new doors. Family businesses are often already practicing sustainability without calling it ESG. This roadmap simply helps them turn implicit values into explicit advantages. Imagine having a cockpit, a single dashboard where you can see the health of your business at a glance, not just financially, but socially, environmentally, and operationally. That's what the Integrated Portfolio KPI dashboard delivers. You track 4 key areas simultaneously. First, financial KPIs, metrics like ROI and revenue from sustainable products that help you invest smarter. Second, environmental KPIs, energy intensity, carbon footprint, and waste reduction, numbers that show how your sustainability efforts are paying off operationally. Third, social KPIs, metrics like employee training, job creation, and supplier development, showing how your business supports people and communities. Fourth, governance KPIs, tracking transparency, ESG-linked contracts, and compliance to build trust with banks and investors. When you combine these indicators, you gain a complete picture of performance, not just profit, but potential. This dashboard turns intuition into intelligence. It transforms decisions from reactive to predictive, empowering SMEs and family businesses to run their portfolio like world-class organizations. Data is not just information. Data is power. Transformation starts with action, not next year, but today. Here is a simple, high-impact checklist you can start immediately. First, identify 2 or 3 priority sustainability challenges. Maybe it's energy use, waste, or supply chain transparency. Pick the challenges that matter most to your business. Second, map your projects into a portfolio matrix. Use a simple grid, impact versus feasibility. This will instantly reveal which initiatives are quick wins and which should start first. Third, talk to your bank about sustainable finance. Even if you're not ready to apply, start the conversation. Ask about sustainability-linked loans and SME-focused frameworks. Banks are ready to support you, but you must take the first step. Fourth, pilot one digital tool, a cloud system, an ESG assessment app, or an energy monitoring device. Just one pilot can change everything. Transformation doesn't begin with a grand overhaul. It begins with small, intentional steps that build momentum and confidence. Choose one action from this checklist today, because the future belongs to those who begin. As we move toward the final part of this session, I invite you to reflect deeply, not just as professionals, but as leaders shaping the next decade. Ask yourself these 4 critical questions today. First, where is my organization today on this journey? Are you just beginning to explore digital and sustainable practices? Are you somewhere in the middle? Or are you ready to scale your efforts? Second, what is the single biggest barrier we face? Is it knowledge, budget, mindset, or simply knowing where to start the transformation? Third, which case study resonated most with our business? Was it Virgin Money's simplicity, Dynamac's operational transformation, or the family business's generational leadership? And finally, what is one concrete step I can commit to in the next 90 days? Transformation isn't a single decision. It's a series of small choices that build a new reality. These questions are an invitation to take ownership, to lead change, and to build portfolios that serve not only profit, but purpose. This is your moment to reflect and redefine what your business can become. No business transforms alone. This is where universities and partnerships step onto the stage, not as observers, but as catalysts for real change. Universities are more than places of learning. They are innovation laboratories and research centers, bringing together students, academics, SMEs, policymakers, and financial institutions, the exact combination needed to accelerate sustainable transformation. Imagine students conducting carbon audits for local SMEs, or university-led digital diagnostics helping small businesses understand their technology readiness. These joint research projects create new frameworks specifically designed for local industries. Partnerships with banks and tech providers amplify this impact even more. Banks bring sustainable financing. Tech companies bring digital tools. Universities bring talent and research. And SMEs bring the real-world challenges. When these forces unite, as exemplified by the collaboration between Bina Darma University and Tongmyong University, we create a powerful regional ecosystem for sustainable digital growth. This isn't the future, it's happening now, and you're part of that movement. We've covered a lot today, but if there are just 4 things I want you to take away, they are these. First, digital transformation and sustainability are not optional. They are the twin engines that power modern competitiveness. Companies that embrace both will undoubtedly outperform those that don't. Second, innovative financing is accessible now. SMEs and family businesses can access green loans and sustainability-linked loans. Tools once reserved for large corporations are now designed specifically for you. Third, the case studies prove that sustainable innovation is profitable. Dynamac proved heavy industries can decarbonize. Tech Forward showed sustainability fuels innovation. In every example, financial performance followed purpose. Fourth, you don't need a massive budget to begin. You need intention, clarity, and the courage to start. Every great transformation begins with one simple step. The world is changing rapidly, but with the right mindset and tools, SMEs and family businesses won't just survive this change, they will lead it. We now arrive at one of the most important parts of today's session, the conversation. Because transformation doesn't happen in lectures, it happens in dialogue. It happens when ideas meet questions and when insights become action. So I invite you, bring your curiosity, your challenges, and your dreams. No question is too small, and no idea is too bold. Whether you're a student thinking about the future, a business owner looking for direction, or a policymaker shaping frameworks, this is your space. Ask about digital tools. Ask about sustainable financing. Ask about strategy or generational leadership. Ask about carbon tracking, AI, or ESG reporting. Whatever you bring to the table enriches everyone here. Think of this moment as a stepping stone, the bridge between knowledge and implementation. Your question might be the one that sparks someone else's innovation. So let's talk. Let's explore. Let's design the future together. one question at a time. To conclude, let's quickly define the key terms that empower your discussions with banks and investors. ESG, environmental, social, governance, is the framework that evaluates your business's responsible operation. It is now essential for company valuation. A green loan is dedicated specifically to environmentally friendly projects, such as energy efficiency or renewable energy. The Sustainability-Linked Loan, SLL, rewards your performance. Hit your sustainability targets, and you get better loan terms. It rewards progress, not just project type. Finally, taxonomy is the classification system defining what truly counts as a sustainable economic activity. Knowing these terms positions you to negotiate better terms and lead your business with confidence. If you're wondering, how do we actually get a sustainability-linked loan or green loan? This slide is your practical roadmap, distilled into 4 clear steps. First, conduct an ESG or energy baseline. You need to know your starting point. Use digital tools or simple energy assessments. Banks expect honesty and clarity, not perfection. Second, define clear, measurable targets. Pick goals you can easily track, perhaps reducing energy by a specific percentage or improving safety metrics. These targets show banks that you are serious and committed. Third, approach banks with sustainable finance programs. Most major banks now have dedicated green financing teams. Ask them about sustainability-linked loans, green loans, and their SME frameworks. Banks love prepared borrowers. Fourth, negotiate the KPIs, monitoring, and incentives. Agree on how targets will be measured, who verifies the results, and, crucially, how the interest rates adjust based on your performance. Once you follow these steps, you unlock access to cheaper financing, stronger partnerships, and higher credibility. It's not complicated, it just requires intention, structure, and action. As we bring this presentation to a close, understand that every insight shared today is grounded in rigorous, credible research. We are talking about evidence, not just theory. Studies across Europe, Asia, and North America consistently confirm the same pattern. Digital transformation improves sustainability performance, and sustainability, in turn, boosts financial resilience. Research shows SMEs embracing digital tools successfully reduce waste, improve productivity, and strengthen their competitive position. Furthermore, studies on family businesses reveal a strong link between ESG practices and long-term firm value. Family firms naturally think in generations, and sustainability aligns perfectly with their DNA. Global frameworks like the EU taxonomy and World Bank SME tools have made it easier for small businesses to understand this path. This slide reminds us that your transformation is not a gamble. It is supported by global research, proven frameworks, and real-world success stories. You are stepping onto a path that is tested, validated, and rising in momentum worldwide. And finally, let's ground everything in the stories that inspired today's session. Real businesses achieving real results. Virgin Money showed that simple digital tools unlock sustainability for thousands of SMEs. Dynamac proved that even heavy industries can decarbonize with the right financial incentives. Tech Forward reminds us that sustainability is a strategic engine for innovation and growth. These are not isolated examples. They are powerful signals that sustainable portfolio management is not only accessible, but profitable. Signals that SMEs can lead the next economic transformation. Industry reports from major institutions like McKinsey and Deloitte echo this unified message. Digital tools, sustainable finance, and ESG practices are reshaping competitiveness globally. These references, academic, practical, and financial, together form a powerful conclusion. The future belongs to businesses that are digital, sustainable, and courageous enough to evolve. And now, equipped with this knowledge, you are ready to be one of those businesses.